All right, guys, welcome back to the class. So in this section, I'm going to be discussing order blocks. So this is basically one of the elements that we use for the overall strategy, that is a liquidity sweep strategy, right? So understanding this part is also going to make us understand the general overview of how the strategy works. All right, so order blocks, as you may know, they are optimized demand and supply zones. They are usually formed when a large amount of money enters the market, resulting in a massive move. Yeah, so basically when you have so much like especially the institutions come into the play, like they are trading at that particular time and they put in large amount of money and they move the market in one direction. That position where they are stacking in their orders is usually the order block. So basically it's like a stepping stone in the market, right? So you will use it for different functions, so basically for entries and exit, right? So you can see an order block and decide to use it as an entry, because at that point, whenever market goes to mitigate an order block, there is usually a reaction, right? It's either a reaction, a positive reaction, or a negative reaction, right? So we also use it for confirmation of trends. So you see an order block in a particular trend, in an uptrend or a downtrend, bullish or bearish, signifying that, okay, when price gets to that order block, it's going to mitigate it and continue going in that particular trend, right? We also use it for stop loss placement. So if you're entering a trade and you want to have your stop loss order just above or below the order block, depending on the side of the market that you are on. So you're not going to be using a stop loss inside or in between an order block. It should be above or below the order block, right? So let's get into the market and see what the order block actually looks like. But before I do that, let me just let you know that in simple terms, order blocks are basically like the last buy candle before the sell starts in a bearish market, right? The last buy candle that usually propels that move or usually sponsors that move. So we have the last buy candle before the sell actually starts. So we have a move like this, right? So the order block is usually probably going to be around this zone. So it's probably the last buy candle before the sell actually started. So in a different trend where we have the bullish trend just like this, something like this, it's usually going to be around this place here where we're going to have the last sell candle before the buy move. Okay, so let's take a look at what that looks like in the chart. All right, so this is the chart and I'm going to point out some order blocks randomly, and then we're going to look at how to actually trade them properly, right? So okay, now take a look at this move right here. Now this is a sell candle before this buy move actually instigated, right? So this last candle right here is an order block. So there is a lot of institutional orders in this particular block right here, which in turn, when price gets to it, it actually reacts. So you can see that now this is a market that is an uptrend, and when price got to this order block right here, you can see the reaction, right? Sometimes we have a very quick reaction, sometimes it takes a little bit of time, but in most cases it's usually a quick reaction. You see market reacting quickly to that order block because they are like more or less like releasing orders. So if they start selling here and they start buying, it means that this sell positions is actually still open and running in losses, right? So anytime price gets back to that order block, it mitigates. That means it closes their position either in break even, or if it goes deeper into the structure or deeper into the order block, it's actually closing with even more profit, a little bit of profit, right? So that is why we can have massive reaction the moment it's like a trigger reaction, right? Like a catapult. When triggered, it just releases and moves fast away from that particular order block, right? So this is a bullish order block, right? So let's get more examples. All right, so this is another order block right here. As you can see, this is more or less like a buy candle, sorry, a sell, this last sell candle before all of this move. Now, to explain this further, you can see here this sell candle was created, which serves as an order block, and immediately after we had this push in the market. Right now, the price has not really come back to mitigate this order block all within the zone here, and the order block has been left unmitigated. That means it has not been closed or touched earlier, right? So if you put your line just above or on top of this order block right here, expecting that when price gets to this order block, there will be a mitigation and a reaction. So when price touches it, you expect to see a reaction to the upside, basically mitigating this order block, right? So if I move the chart a little bit to the left side, okay, now see how price comes into that order block, right, and reacts and give us a push to the upside. Right now, if you look at the push, if we go to the left, you could see that this whole push, this whole order block has instigated all of this move to the upside. That is the power of order blocks, right? You can literally find these order blocks everywhere and anywhere, but they are not necessarily going to work every time you see it. So you have to add other confluences like your structure, your market trend. You just have to find them in areas of interest, so they give you a high probable trades, right? So let's just randomly find some order blocks around. Okay, so if I open up this chart from this zone, now this is an uptrend, obviously, so we're going to see a couple of order blocks just sitting around, helping price to push to the upside, basically serving like a stepping stone for pushing price to the direction where market is actually supposed to go, right? So right here you see this last sell candle before this buy, this order block, price came in, mitigates and push to the upside. Why it is pushing to the upside is creating what, another order block, right? One sell candle and we have this buy push, market drops down, moves again, so on and so forth, creating another order block right here. This is another order block right here, this last buy candle before the sell happened, right? And what do we see when price got to this order block? You can see it right here, mitigating the order block, it drops. Now it didn't give much peeps. Why is this? Because the market is trending to the upside. So when you want to see a functional order block, the one that actually will give you mitigation power to continue in your direction is when you are trading in the right direction, right? So if you are in an uptrend, for example, what you want to be seeing is buy side order blocks, right? Order blocks that push the market to the upside. If you are in a downtrend overall, you should be looking for order blocks that actually pushes the market to the downside, right? So if you are in an uptrend and you're seeing an order block that pushes the market to the downside, there is a high chance that that order block is not going to be respected, right? It's just going to respect it and give you a little bit of peep, but not the kind of movement that you want in the market, right? So order blocks is usually traded with a zone, and also in line with the trend. That way you get high probable order blocks. Another way to get high probable order blocks are higher time frames. So you want to see order blocks like on the 4-hour daily time frame. Those ones actually holds even better, right? They're stronger because it takes a lot of time for those order blocks to actually accumulate and be built, right? This is one right here. Now this is a downtrend, right? So you see how price created this order block right here. Okay, so let me just pull it up with this. So now we've got this reaction right here. Okay, so market pushed to the downside, then it's correcting. Now after this correction, we have impulsive move, right? So before the impulsive move started, what did you see? A buy candle was pushed up, then immediately market started selling, right? The price started dropping, and when price got back to the order block, you can see the mitigation right here, touches it 1 2, and then you can see the massive move. Now because this is a trend, a downtrend obviously, so you can see the power of the order block mitigation and then the massive drop in the market, right? So going forward again, you could see right here that this is another order block right here. So market pushed to the upside, gave a buy candle and then dropped again. So now you see when price got back to that order block, because we're still on the trend, you see how price still drops again and give you even more and more peep in the market, right? Good. So that is just basically how order block works. So we're going to combine it with other functionalities and other elements to give us our proper strategy. Okay, so if you have not understood what I just said, you could always watch the video again. I'm sure you're going to understand it even better, and it's going to be clearer for you. All right, thank you. See you in the next video.